Just making sure you guys can hear me.
Yes, sir.
Yes, sir, we can.
All right, sweet. How you guys doing out there recently? Pain in the ass or what?
Yeah, pain in the ass for the most part.
Yeah, yeah, this market's been tricky. But I was kind of talking about this earlier today with fellas in the room. Like if you were just to say objectively, what would be the healthiest thing for the market? Because from my perspective, we've got Nvidia's earnings coming up this week. What exactly is set up properly to take the market higher? Like if I were to look at just like the equal weight ETFs or just the ETFs in general, where you're looking at the spider ETFs, it looks like industrials could maybe go higher, healthcare stocks, biotechs, which you guys probably know like I do, are some of the least entertaining names to trade because they probably have some of the most risk attached to them.
It's
So
hard to,
it's
it's
just
just hard to be a stock picker of those in that group.
right. It's like so either you own XBI or you own LabU if you want it to be a little bit faster.
Yeah.
Right? Like look at XBI. I mean, that's just an insane trend. And LabU's been obviously that much better because it's the leverage version of it. Um, but I don't get excited. Like energy stocks is the other one. Like if I look at something like Dino, right? Do you get excited to like park your money in Dino, even though like it's in an uptrend? The fact it's in an uptrend, despite how weak crude has been, you have to give these things a little bit of their credit. Like even a name like PARR. I don't know if this one just hit any of your guys' alerts. Um, but this thing is awesome. It's in a beautiful uptrend. Same thing with names like INSW, STNG. Today I just saw lithium's picking up ALB, SQM. So it's like, and that's like a potentially a newer trend when you're looking at lithiums. So it's just like it's not what we have just been shoved down our throat for the last 5 months. So it's hard to make that switch mentally where it's like, okay, yeah, now I'm trading commodities,
Yeah.
right? Where
Yeah.
I was just in Robinhood for the last 5 months, or Tesla, or Nvidia, or AVGO, TSM, right? WDC, like just these beautiful, nice growth AI data center build out, your Iron, your Hut, your BE, right? Like it all made sense because it was all attached to the same theme. And now all of a sudden, here comes Eli Lilly out of left field, and it's the strongest trend in the market. And you're just like, what the hell? Like,
Mhm.
it's hard to mentally make that pivot. Or even a name like, again, this INSW, this TNK, we could look at these names and they're nice trends. Um, I'm just making sure. Can you guys actually see my screen?
Yeah. Yeah.
Okay,
Yeah.
cool. When I look at this is a nice steady trend, but what's the issue with some of these names? They trade 20, 40, 50 million bucks a day, right? It's not on everybody's radar. They're not sexy, but they're in just these steady trends. Um, so I'm having a little bit of a hard time, and I just got off of really nice shorts. So I still have some myself, but I just got off of, and I shorted Cypher to perfection. The day this thing had this big pickup in volume on earnings at 25 bucks. I shorted it into that high at 25, risking off a high. It's like 25.06. And I just covered most on Friday into that pre-market washout. Um, Oklo, I have a 146, almost as just a very classic head and shoulders pattern. And that kind of failed to break out above the 20 simple moving average. And then Rigetti, I actually traded this one twice into this kind of I put out a tweet a few months ago where it was like I didn't think these names had to go parabolic, and I know Brack, you talked about this where like you've studied the parabolic short setup intensively. We haven't really had a true parabolic blow off move. The rare earths AMY, which I shorted well, but I didn't catch the second leg. And then before that, like MSTR. And I didn't think that market was going to give the crowd what they wanted because these names had so much attention that it was like, okay, here's the parabolic Rigetti 70 from 55 one day, and then you get the big failed breakout at 70 on a giant pickup in volume, and the market's telling you the move is done. I didn't think that it didn't make it easy on the way up. I didn't think it was going to make it easy for the longs on the way down. And I'm assuming just based on the way it broke down, there's probably a lot of people who just hung on, just saying, well, it's above the 10-day. Well, it's above the 20-day. Oh, okay, it's bouncing, it's consolidating. And then it just rolls over some more. And it's this second leg that really, really sped up, which probably is where everybody started to close out that position. So the market has not made things easy at all. I would say, even since Bitcoin started to lag, once Bitcoin started to lag, you almost had to be open to the idea of playing both sides of the market. Because once things get 8, 9, 10, 12, 15 times its average true range from the 50, you're just so far extended. There's like no more meat left on the bone. So I don't know. It's names like today, like EOSE, where I'm coming into today going, okay, maybe it's a little short or maybe it's a little soon to initiate new shorts. And it's maybe just a touch early to get some fresh longs on breakouts. Yeah. But if an EOSE can bounce from the 50, then maybe we've got something. And here we are, we're resting right on the 50-day. Do we at least get back above intraday VWAP, and then have like a nice little, 50 cents of risk to maybe try and sneak back into a name that ultimately looked pretty good just 10 days ago.
Yeah.
Like,
so, it looks great.
Fantastic. What, dude? This was like a beautiful little bull flag where you're like, okay, big move up, has done nothing wrong, all while rare earths, quantums, nuclears just got their asses kicked. I guess the only issue when you would look at an EOSE is an AMPX didn't hold up all that great. QS is just, I'm going to give QS a little bit of credit too, but it looks kind of like nothing, dude. It just looks like a bunch of nothing. So, does EOSE ultimately fail? I don't know, but if you're above the 50 simple moving average, I'll try to not argue with it too much, and see if it wants to give a bounce. But it's been tricky, because even today when I tell myself, Ariel, it's maybe you don't want to short, after the market's already had this 5% down move, but again, I'll toss this over to you guys. What is set up to actually go higher? I saw the move in Google today, but does Amazon bounce and help the market? I see Apple still holding in there. Microsoft kind of looks like trash. Meta kind of looks like trash. What is set? Are the memory stocks still a little too far gone? I don't feel comfortable longing SNDK here or MU or WDC or STX. What say you guys? Where's your eyes at that would make you comfortable to be like, okay, this group could carry the market higher?
Well, first, obviously, you hit the healthcare names, the energy names, the chemicals, the biotechs. But again, those obviously don't have the weighting to move, like a QQQ. Like I said, the things we've been, paying attention to. I still really like the looks of some things like Snowflake and MDB. For the most part, those are two, I think, of two extremely attractive looks. AMD still looks really attractive up here. If this ends up I don't know what this would need to do to fail. I thought later last week it was a little bit susceptible, following the kicker candle gap up on Wednesday to kind of not following through a little bit, especially on Thursday. But AMD looks really quite good. Even something like ASML, which is still just coming off of the bottom. It's hard to say.
Love this name, by the way. This is like a moat.
Oh yeah,
Yeah, this name's is got a moat attached to it. So with the lithographs, yeah, and bouncing right off the 50 too, which by the way is just my thinking. Does an AMD just need to get through Nvidia's earnings, and does it just need to go sideways for another 2 weeks? Like if Nvidia were to just to give like a failed move higher on earnings, but AMD that just equals more sideways, that's the best case scenario.
Yeah, I mean, the big thing for me was, I mean, if you look back at the Qs in August, we kind of had like that double bottom at the 50-day. I mean, the correction was pretty similar in percent turns, around 5 to 6%. But if you look at the Qs, late August, I mean, look at some of the bases that were out there, and like quantums and nuclears. Even the memory stocks hadn't even broken out yet at that
Right.
time,
Right.
right? And not necessarily like, do I think the quantums could take the market higher at that point, but like that just goes to show the risk appetite that people have, right? Which is really important for like a good trading environment, right? I mean, just go look at some of those bases, and they're not a base like Snow or AMD that's like, inching higher high, higher high. These were like descending bases, right? With like VCP patterns like MU and SNDK, IONQ,
And
OKLO.
this
Like
was
there's none
nice.
of
Like,
that.
yeah, Oklo I bought on 9/11, and it ended up being an awesome trade in 2 weeks, right? Do we have any of that right now? Like IONQ, I thought was, this is like for like this speculative money. This is as gorgeous as it gets going into. I think this was on 999. I mean, that's as good as it gets, right? As low risk of a effectively like a kicker candle before a base breakout on an IONQ. Do we have that right now? I don't know that we do. And it's like the momentum is in names in the biotech sector, which is just the last place I really want to sit there and get aggressive. I mean, I just put this list out of biotechs, and like these are like NKTR.
Yeah.
Like, is this really what I want to get into? No, but this is setting up a new base after a nice move, right? Really big move and a fresh new base. So, like, am I supposed to argue with that, or am I just going to wait for like the XBI and LabU to just tighten up one time so I can get involved? Like, I don't know. Um, so yeah, I don't know that we've got enough BEs out there to like spark up speculation money flooding back into the market, because when it leaves and it gets the colonoscopy that it just got over the last 2 weeks, I think it really intimidates traders to like get back and get like when it's working, it's really working, and like buying begets buying and everything's going nuts. But when it unwinds and something happens to traders like UAMY, for instance, right, who just held this bag going down, now all of a sudden, you know what happens? Like emotions take them to the whole other side of the spectrum, which just says, I'm not touching it. These things are zeros. All of a sudden, now they're all zeros, but they were buying them at 16, a month and a half ago. Um, so yeah, and from just a trading perspective, I don't see enough high quality bases that's just going to either it reignite speculation at at best, at best, I'm looking at Bitcoin and I'm saying, have you washed out enough? Question mark. That maybe you can start to bounce an MSTR. Maybe Coinbase starts to come back around. Maybe that kind of helps some of the um, Bitcoin miners that didn't quote unquote move as data center plays, that kind of thing, right? Does an NBIS come around? Does Oracle hold the 200? Does CoreWeave stop getting absolutely destroyed? But we're asking as swing traders for like the wrong thing, right? Like we're asking for stocks to rebound off of getting destroyed. We're not
Mhm.
asking them to like continue an uptrend because they're not in one, right? They're in downtrends, and we're asking for bounces as possible trades, not for trend continuation, right? If we're looking for trend continuation, that's in Dino. Who the hell wants to be in Dino? SF Sinclair. Is that what they're? HF Sinclair. Like, is this really what we want to be in?
Yeah, it's the gas stations with the little green
It's
dinosaur.
That's what I'm saying. So it's like, is that what we want to be in? Well, and then if you like zoom out, and I talked about this last week, this XOM base is big of a base as you're going to find in the stock market.
That's what it's starting to kind of pop out a little bit.
It sure is. And look at what they did with PARR today, up 10%. Look at what I mean, dude, the list goes on and on. Like, look at EQT.
Did you grab any of these today or last week?
No.
Okay.
I haven't been able to get to like PARR. By the time it like hit my radar today, I was like, what's this candle for? Yeah, gone.
It must be like some chat room, I think, or some bigger chat room. I bet alerted it.
Yeah, Mark Minervini.
Honestly, it might be.
Yeah.
Yeah, it really feels like for like oil and gas names, to me, like I always thought that, if I was ever going to trade these, I would need to have some sort of underlying strong like conviction tied to them versus like a BE. And I feel like to get that, you would need to have been looking at these and positioning into them like in mid-October or early October, like paying attention to these before, these are really taking off now, which was tough given the opportunities that we had and like the momentum side of the market at the time. Like, why would you have been paying attention to these a month ago?
You
right?
wouldn't have. You wouldn't have,
And then now
because
you have everybody coming to these now all at once.
I'm a bigger fan of buying commodities off of ascending moving averages. So almost buying them when they're disliked. So you're buying these pullbacks, or effectively, when an XOM gives you just a really nice technical pullback right into an ascending 20-day, ascending 10-day. The deeper, the better. Sometimes the 50-day. But you just look at XOM, the 50. I know that they're one of the biggest nat gas producers in the world. So while we get solar and nuclear really up to par to power these data centers, we need the power and we need it now. Nat gas seems to be the easiest resource we have to so because I'm looking at crude oil and there's just 0% chance this is moving higher because of crude oil, right? Like I'm looking at XOM and I'm going, this isn't going higher because of crude. So it has nothing to do with their crude business. Well, what else do they do? Nat gas. Okay, that makes sense. What would that be used for? Powering the data centers because we need that power like yesterday. So that makes some sense to me as to why these names could be going higher, which is like the best, when you've got like a nice technical chart and then like I always kind of say, what do the technicals say? The technicals just say they're trying to go higher. Well, what's the thesis behind that? And then like you kind of come up with something good and then you like buy that breakout and it starts to work. Right now, I just like hang my hat on that, that thesis that you're like, well, that's probably how you felt on BE. Like you knew a little bit of the story, but then once the technicals aligned, you're like, oh yeah, I'm going to buy this with both hands and now I'm green. And now you just don't let that sucker go because you've got, you're on to technicals that are working and a thesis, that is kind of backing up what those technicals are saying. So we'll see if, it ends up being a nat gas story, but there's a lot of that going on. And then healthcare, dude, I don't want to, I like Lilly, I saw like ISRG. Okay, fine. I saw TMO is another one. I think AbbVie was another one. Like
Amgen looks pretty good too right now.
Amgen had a nice base, or base breakout. I want to say like, I don't know, 6 or 7 days ago, maybe. AMGN. And I thought this thing looked pretty dang good. Yeah, right through, I don't even know what day this would have been. 11/5. Yeah, I mean, it looks great, but are you going to buy Amgen or are you just going to call up the grandmother and be like, Grandma, I got a play for you. Buy Amgen, you know what I mean?
Manor bought that on that day over
305. Yeah, it looks good. It really looks good. And if you bought it properly, fine, you're in there. But it's not like you were thrilled like you would have been like when I bought my Tesla breakout at 360.
Yeah.
Right? It's not like, hey, man, if you're not leveraged in this thing, you don't have enough. Right? Like you're not sitting there telling yourself that with Amgen. But here you are. It's working fantastic. And I don't really care for them. Like they just don't. It's almost easier to catch Cypher on a 40% fade than it is to catch Amgen on a 40% up move. Like I want to say Amgen in like the same amount of time Cypher dumped 50%. This thing is up 12. You know what I mean?
Oh yeah.
Yeah.
So It's not exciting.
Hey,
And
you
that's
looking at any of the Latin American groups like
yes,
Brazil,
yes.
Argentina?
So VALE was one that kind of came across my radar, and then I was looking today at the EWZ,
Yep.
identical. I mean, this chart is it's identical, right? So it's like money is going into, and then it's not just it obviously Argentina, and then my favorite is when you'll see a name like
Yeah.
YPF, and then you'll also see like a GGAL, and they look fairly similar with the gap up when Argentina had the gap up. And then these names have either just been hanging out and doing nothing wrong after the gap up and just kind of digesting. And I look at a GGAL and I go, I mean, super, super tight inside day, resting right on the 200. Argentina's acting well, and tonight I'll probably set alert right at today's highs. And if we start to take that out, this could very well be a name that you're buying tomorrow if the Argentina ETF continues to act well, because it's more of it's not moving because of the group that it's in. It's moving more so because of the country it belongs to.
Yeah.
So, yeah. Um,
Yeah, that's why. So I've got a chunk of basically like God, I forget who that guy is in the Market Wizards books where he spots like a theme and he'll buy like 12 of the stocks in the theme and he'll see which ones stand out. You know what part of that I'm talking about?
no, but I do remember that being mentioned before in that book. I don't know exactly the trader, but Stan Druckenmiller does the exact same thing for
Yeah.
what it's worth. Stan Druckenmiller, even the first time Argentina took off, Stan Druckenmiller just tells his trading desk, just buy me the 5 most liquid, and then we'll do our research on these companies and figure out which ones we really want to keep.
Invest and then investigate.
Yeah,
Yeah.
that's exactly right. And Stan Druckenmiller does the exact same thing. And for him, you just got to go to the 5 most liquid.
Yep.
But I do like that idea. I don't know about buying 12 of them, but no, it makes sense,
Yeah.
right? You get like a little 8% of your portfolio in all of them, and then it gives you like a day or 2 or 3 to just like kind of sit with them and do your homework on which ones are actually trying to act best, which ones actually have good fundamentals, good earnings and sales, and are showing the best relative strength, next to maybe peers in their group. Like I remember there's been times where it's and I want to say it was like YPF when like crude oil was doing nothing and YPF was, in this uptrend. I mean, guys, I know you remember this. Crude
Yeah.
oil was doing nothing in 2024. Yet YPF was in a really nice uptrend. Or was it YPF? Yeah, and GGAL.
Yep.
Let's pull up
GGAL was
YPF.
the monster of the group.
Yes, it was. Yes, it was. I mean, but this isn't very, very, kind of sloppy, but
Yeah.
all of 2024, a nice steady up, especially when it came out of, this last consolidation.
Mhm.
Just perfect too. I mean, just a beautiful little set of higher lows, nice and tight, coming out of a base, and then you get this, really, really nice acceleration into the end of 24. But yeah, I mean, I like that idea too. And EWZ is probably the ETF that most stands out. So Brazil, at the moment, if you like really, really zoom out on Brazil, and we can kind of go like 5 years, it's just been stuck in this sideways base. Probably good to go back even further. Just stuck in this really sideways base, and it kind of feels like emerging markets can outperform ours for just a little bit. Like
Yep.
we haven't really had that for a while now. It's been U.S. dominance for
I think
quite
this is
some
the
time.
first year in like 15 years of notable move of the emerging markets notably outperforming this year
Yeah,
since
yeah.
I think like 2000, I don't know, like 2010 or 2009 or something. Um, yeah, 2009, I think. Anyways, ECH2, the Chilean ETF, very similar. And this is one that
At highs already.
yeah, so this is a country that has yet to be doged, if you will. So that's kind of, I mean, that's kind of like the behind, like the philosophy kind of behind Argentina, right? They're coming in and getting rid of the corrupt government, kind of ramping up capitalist philosophies, if you will. And, they're seeing the impacts, especially in Argentina being first. And slowly, each of the other, Latin American companies are, electing party representatives that are more of the, full capitalist agenda. And Chile is one of them that
And already at highs too. Let me ask you something. Does this one become a news failure when they do elect? Is it running a little too prematurely?
Yeah, very possibly. In fact, I actually think they either just had their elections or they're just having it coming up. I didn't think that when you hopped out, we were going to talk about the Chilean elections.
Dude, I mean, we talk about anything, man. If
Where
it's
the
going
market's
up,
at
it's
right now.
interesting. If it's going down, it's not so interesting. So,
Hey, Ariel, I have a question.
Yep.
For anyone who like in the group may be wondering, what are, typically when you get like the end of a, an up cycle in the market and we're in a period like this, what are some of the first things you like to look for as just some basic, foundations to maybe start getting back involved or interested in that side of the market that you do enjoy trading, right?
yeah, so naturally you're going to make the most amount of money being long bias. So that's the first thing that I want to do is where is money going? Unfortunately, right now, it's going to healthcare, it's going to biotechs, right? It's going to some energy stocks. Fine, I can get behind the nat gas theme, but it's like it's tough with biotechs. So like unless you're just going to own LabU or XBI. So and even utilities right now, like they're just not that thrilling. Even though some of them are still acting well, like even when you look at a GEV, it's just building out a whole new base, which is fine. But the ideal scenario, and it's good for everybody to remember this, the best time to buy stocks is after a market correction, right? The bigger, the better, right? Because while the market is correcting, longs aren't working. You can't get really long because progressive exposure isn't working. So you can't get long with a 10% position. You're just getting stuffed. And so you have to size things down and you're just getting no traction, no traction, no traction. Meanwhile, the market's coming down. The best thing that can happen is the market gives you a 10% plus correction, right? I think that that's like, especially when you think about the QQQ from April low to highs, I think it was up like 58%. And I was actually just looking at the QQQ today, and I kind of mentioned, and again, this would be like my fantasy, and let's kind of go over what my fantasy would be. It'd be Sydney Sweeney coming over. No, I'm kidding. Let's go. No. Let's be serious. So it would be. I'm about to be a married man. So the April correction went to where? Right? It went right to the 2021 highs effectively, right? 2021, 2022, we bounced right off that level. Okay. And that was a huge opportunity because you started to see relative strength in what? Robinhood, Palantir, Nvidia, CrowdStrike, Netflix, Spotify, Uber, right? The list goes on and on. Some ended CLS. Some turned out to be much bigger winners than others. We could all agree you weren't going to catch them all, but it wasn't that Uber and Palantir and these names corrected the most. It's just that when we got to the lows of April, if you actually go back and look at a CrowdStrike, you look at a Palantir, you look at a Tesla, they refused to break March's lows. So the market put in a low on March. In April, it really washed out below that level. And I guess we'll just zoom in on the daily really quickly. And we'll see exactly how this played out. So you had a low in March and then a really big washout going into April. Well, what really didn't you see with a Netflix, for instance, right? You didn't see this giant washout. So here's your March low, and then here's your April low. I mean, it hardly broke the low and instantly reclaimed it. So it was already showing you way more relative strength versus the market than other stocks. Well, what else did the exact same thing? CrowdStrike did the exact same thing, right? Where you put in your low in April, or sorry, in March, and then your low in April was a double bottom. It was a double bottom. So in my ideal scenario, and this is like just me hoping and praying, it's we just got a 60% up move in the Qs. We're down 4 or 5%. If the market goes sideways for another 2-3 weeks and corrects via time, I think that then we could just start to say to ourselves, what stocks are holding up best for when the market starts to break those names out, give you some follow through, and then I use progressive exposure. So I take a 10% position on an earnings gap up and the market follows it through. I miss an earnings gap up, but I'm able to buy the high volume close and the market follows it through. I'm able to buy a low cheat setup where it like looks like it's about to try to break out, but it's like kind of in this lower consolidation and it tries to break out and I get it and it starts to work and the market is giving me feedback. Okay, that's one option. Market just goes sideways here, digests, chops people up for the next 3-4 weeks, and then we go. Option number two is similar to what we just saw in April, where the washout bounces right off of 2021 and 2022's highs. In my dream scenario, we go back and we bounce at this year's highs, right? So we give a lot of this, not a lot of the move back, but call it about half, right? Where we just went up 60%, but now all of a sudden we can go down 15%, right? And that won't be enough for CNBC to call it a bear market, right? And so we don't have to worry about that. And by the way, best to listen to CNBC on mute. But we get a 15% correction, and then during that correction, call it of 10% or more. Then we just wait for the classic Bill O'Neill follow through day, where the market gives you a low, it bounces for 2 or 3 days. On that third or that fourth day, you get a pickup in volume over prior day high. And when you go and do your nightly process, do you have a few stocks that are buyable coming out of a tight range where you can limit risk, right? Because the job is the same every single night, no matter what the market's doing. Where's money going? Where's money leaving? What are the technical setups that I've learned? A bounce and an undercut and a reclaim of a key moving average, a break of a little range, earnings gap up, a high volume close, a low cheat setup, an undercut and rally. Okay, so you've got your playbook of the 5 setups that you like to trade. Now, stick your eyes onto the groups that are acting best, right? So say to yourself, there's 197 industry groups. Limit your eyes to the top 30 and top 40 groups in the market. Don't deviate and start looking at the stocks that have gotten beaten up the most. Start to look for the stocks that are acting best when the market has gotten beaten up the most. Because if the market just does what it does all the time, which is historically just channel higher over time, despite big ugly pullbacks, we want to know what are the stocks that institutions have refused to sell, or what are the stocks that they have accumulated. Once that's done and you've got your list and you bought something and it works, you buy the next thing. And that works, you buy the next one. And that works, and you buy the next one. And in the ideal scenario, market goes down 10%. Market then gives you a follow through day on day 3 to 4 off of the lows. And then you've got buyable stocks. And one of the best things ever is, I remember, and I'm sure you guys remember this correction too. Do you guys remember the correction in 2023 where it was just the most
Dude, we
perfect?
talked about it for like probably an hour today.
Yeah. So you get the most perfect 3 ways down. You get your follow through day on November 1st. And what did you get? You got a buyable stock breaking out on earnings with deck, right? Right here. And this was October 27th. So the market puts in a low, and this is already gapping up on good earnings before the market gives you a follow through day. So all of a sudden you're like, wow, the market's still going down and deck is gapping up on earnings. Interesting. I'm going to wait for the market to give me a follow through day. How about ANET? And then ANET, all of a sudden, market gives you a follow through day. And what does ANET do before that follow through day? On 1030 or on 1031, it's at a new 52-week high. On the market follow through day, it broke that high volume close on earnings day and then just proceeds to trend that entire time, right? What about AMD? What did it do on November 1st, right? On that November 1st, it reclaims the 200. It has a hell of a move. And it's funny because if you look at this, it looks a whole lot like the Qs. Then the moment this thing posts somewhat decent earnings and the market is no longer in a downtrend, it's just triggered, it's just triggered a follow through day. You're buying AMD back through the 200. And what does it proceed to do? Goes up over 100% from 100 all the way to 225. So there's definitely things that I would prefer, which is give me a 10% correction followed by a follow through day. That would be like the best case scenario. Or the other scenario is we're just patient for a few weeks, let the market chop around, maybe let Nvidia gap down on earnings, freak everybody out, build out a brand new base. And it sucks because I want to be active too, but I want to be active in a great environment and have all of my money ready to go when the environment changes. And that's why recently I've been getting no traction on the long side. I got stopped out of I had ARC for 5+ months, right? I bought this breakout right over here. I mean, you guys probably even saw me post
yeah.
that I bought the Kathy Wood t-shirt. And I bought this thing in June, and it's a beautiful move, but then eventually I got to take my exit, right? You start to break below the 50 simple moving average, I'm out. And so I'm out of ARC. I got stopped out of Rocket Lab, which I bought, coming out of this base as well. So for me, I'm gaining no traction on the long side. I'm gaining traction on the short side, shorting the names, the spec stuff that got wildly extended. And I got to thank you guys for UAMY because I was looking at like USAR. Yep, I was looking at USAR and you guys are like, yep, UAMY. This is like right into my plate. And I'm like, this thing is perfect. Like, look at all these gap ups in a row. I was salivating.
That's all
Except
back off.
Yeah, except the problem was he should have messaged me to tell me how much of a turd they were, because I covered it like at $13 when it started to take out a prior day high on
Oh yeah.
1022, and I missed this entire second leg down.
Yeah, so actually what's interesting there on that one is because I think I made a post about this the other day. Whether it was I don't remember if it was the Substack or Twitter, but it's so interesting because you mentioned about like the RGTIs and stuff like that that didn't give perfect parabolics, right? And they actually made it hard. And it seems to me that, the groups that where it seems like the majority of the crowd wants to short them on the way up end up giving like a more difficult setup to short, like the quantums or maybe the nuclears. But then you look at like a UAMY and USAR or like UAMY, which like it seemed everybody was so bullish on these rare earth names at the time, and they set up perfectly and just went like bidless. Like, dude, if I could show you the DMs and the comments I got when I posted that UAMY post, I mean, it was absurd. Like
yeah,
an
you're an
account that was
asshole.
made,
You're an asshole for
yeah,
posting these things, dude.
it was an account that was made like 2 weeks ago that was dedicated to like UAMY only, like some dude in my DMs. And
Yeah.
I was like, oh my gosh. And the same thing with MSTR in like November of last year. I mean, there wasn't a single person left bearish at those highs, right?
Yeah,
And it's set up perfectly. And I mean, SMCI, you name it, right? But, and then you get a really crowded short like the quantums and they make it much harder. You know what I mean?
Yeah,
I've seen it
absolutely.
time and time again.
And not only that, actually, it was UAMY and the traction that I got on UAMY that made me go after Rigetti, right? It was like, okay, I just nailed this thing. I've now got some money in my pocket to go and try, right, this quantum names. And it was funny because I got burned on Rigetti once on the way up, and I shorted this on day one, literally as a first red day setup, and I covered like a third of my position into the 5-day at like $51. And then of course, like it wicks up immediately and starts rallying like right from where I covered. And I was like, well, the stop's at high of day on the rest. I'll have made money no matter what happens. And then of course, day two unwind, and then just a steady unwind. And I ended up covering the last of my piece at $35. And I said to myself, like, I'm just going to wait for a little bit of a rally to short, which I did,
Yep.
42.5 against this 20 simple moving average. And they ended up stopping me out on 1030 with just an all-day rally before it ultimately broke down. And then I had to reshort it out of this little bear flag. So they never make it easy. But again, it's the same thing like you just said. You get everybody on one side of the boat, and all of the longs were even saying, when these things go parabolic, then I'm done with it. But instead, the market's not going to do that for you. It's not going to give you this move to 75, let you exit everything, and then flip short. No, it's going to make you think it's going to bounce at the 5-day and continue higher. It's going to,
Yeah.
hold at the 10, and then it's going to break below that. And then you're going to be like, and all of a sudden, you're at 55, 56, 57, and then you're holding it, hoping it holds the 20 at 43, right? And all of a sudden you've just burnt 20% plus of your gains in 5 days. So
Yeah, I have a question. So, when
yep.
it comes to like these shorts on the backside of that kind of momentum cycle, are you approaching them like a lot differently than longs in terms of like how long you're looking to maybe hold them or where you're looking to cover and stuff like that or take profits?
Into ascending moving averages always makes me more comfortable, like covering some off into that, or big washouts like 3 to 5 to 7 days. Like when we got this big move from, from where I entered 55 all the way to 35, I mean, we're talking like a 40% move in 7 days, right? You can't be greedy because shorting is a game of diminishing returns, right? You're not going to grow your money exponentially. Like if something
Yeah.
has a 10% down day followed by another 10% down day, it's not the same as it having a 10% up day followed by another 10% up day. Like you'll have always made way more money on those back-to-back 10% up days.
They're
So
compounding. Yeah.
exactly. So I like to cover some into that weakness. And then if I'm going to re-enter them, rejections off of key moving averages. So like pop back up and then reject at that key moving average. And then I'll just take it down to a 5 minute chart. And then I'll just literally look at what I learned from Gil Morales, which is a 620 setup. So you get your 6 EMA crossing back below your 20. And even on a bounce setup on the long side, that's what'll happen first. You'll get your 6 EMA crossing back above your 20, but at this point, it's already put in an intraday low. And so I know exactly what my risk is when I go
Yeah.
to enter. And then just dependent on the size that I'm taking is the dollar amount that I'm risking, which I
Gotcha.
always like to know how much I'm risking. Like I never just want to, like a first red day setup, very simple. You got to be taking out prior day's close in order for me to even take that entry. And then once you do, what's the stop to high of day? So they made like a Rigetti fairly easy where you're shorting just sub 56 and you've got $2 of risk. You know exactly how many shares you can comfortably put on for that kind of setup. But again, even same day, I'm in 55 and change. You go down to 51 and you give me like that 8% move in a day. I didn't really oversize it, but let me just go ahead and pay myself because it's been a pain in the ass. And then I'll just look to ride it down to the 20. And I posted some of my as like a review on X.
Mhm.
But I do like to just cover
Dude, I
into that
love
weakness.
those monthly recaps. I mean, those are great.
And I always do them because I feel like it's a really good example of you can be wrong a lot and still do really well. Dude, I don't have a 50% win rate. I don't have a 60% win rate. My win rate's 38% this year, and I'm crushing it. Why? Because when I'm right, I just let things work like ARC for 5 months. When I'm right, I catch a 30, 40, 50. When I'm right, it's Oklo for 100%. So, and you don't have to, and when I'm wrong, it's peanuts. And people be like, well, how are some of your trades 15K losses, but then your winners are 400? That's because I'm just sitting there. Like I had in October, it wasn't until I closed my Rocket Lab trade. I had like 12 losers in a row. And that for dollar context was 350K. But then all of a sudden I had one short on Rigetti. It made up for those 12 losses in a row. And it's like, think about that in terms of win rate. I've got like a 9% win rate during that streak, and I'm flat, right?
It's the
Imagine you.
beautiful statistics of risk to reward and trading. I mean, it's like we sit here and we go through like examples of either current trades or previously taken trades or ideal optimal opportunities that we wish we took and we didn't, just kind of reviewing, winners of the market. We're like, wow, like this is something that we look at, we take all the time, a pullback to a rising 20 May, undercut, the previous day's low and reclaim, whatever that entry tactic may be. And we're like, you could have gotten $1.20 of risk. Here it is 4 days later, up $10.80. And therefore, like look back at the past 2 weeks. It's been 5-6 trades, losers in a row. But wow, coming off of that correction or when finally got some traction, you just made up one trade in 4 days
Yep.
for 8 losing trades, 10 losing trades, 12.
And it was like the same thing because right around the same time that I took Rigetti, like I didn't do anything different for my process on the long or the short side. I ended up hitting a nugget as a huge short, and I ended up hitting UAMY as a huge short. So now all of a sudden, if you just take those three shorts, Rigetti, UAMY, and Nugget, I would then have to, one of them got me to break even between the 12 losses, and the other two just paid for the next 25 trades. And it's like, and now I can literally, I'm in the driver's seat for the month, and I don't have to worry about what's the next opportunity. Like, let things come to you. I always say this: your ideas should stem from the bigger picture. Your entries, to get more granular entries, can go all the way down to a smaller time frame, because it's like everything is a fractal of itself onto a bigger time frame, right? Things go up, they go sideways. They go up, they go sideways. Like a 5-minute opening range break is almost no different than a break over prior day high. But when things are all happening in unison, where you go, this looks like a gorgeous breakout, and then the volume on the daily, or this will be a gorgeous breakout. If it does XYZ, breakout over the range, have a pickup in volume. Well, when you take it to the 5-minute chart, it's a 5-minute opening range break, and those two first 5-minute bars are trading a huge amount of volume. But now the nice part is you know exactly where you're leaving if you're wrong, which is the low of the day. That helps you with your position sizing. Yep. And that's it, right? And it's like, it's the bigger time frame where you're going to make tons of money. The problem is when everybody comes from the day trading world, and you guys get this, you guys get guys coming into your room, right? You guys might be, some of you guys are maybe a little bit more swing focused, some of you guys maybe trade options, some of you guys day trade. The day trading side of things, you need a higher win rate. You can't really have a low win rate in day trading, and part of the reason is people tend to oversize their positions because they're fighting for a 2% move, a 1% move, a 2-minute scalp, a 5-minute scalp. And ultimately, you're not getting a big move from your average, right? And I even talked about this today in the room. Imagine you bought the hood breakout as a day trader. Just imagine how disgusted you would be at yourself if you bought this hood breakout and you sold it after a 4% up move because you got paid. And then every single day it did go higher. It closed green, right? But you got chopped up every single day, and you just gave back day one breakouts gains because you couldn't get repositioned in the thing, right? Because it gaps up, it then, kind of dumps, and then it just wicks up at the end of the day, or it gaps up, it dumps all day, and then it wicks up towards the end of the day. But it's green at the end of every single day, but a day trader can do nothing with it. A swing trader took his entry and he's done with the trade. He trims some into that, and then he's just done, hands off. So it becomes really difficult, because the one thing as a day trader that you're always doing is you're always fighting for your entry, because the moment that you click the buy button, price is very, very close to your entry. But if you bought hood properly one time, by day 3, you're up $6-7 a share. You could just let it work on the daily. You're done. But your entry tactic came on the smaller time frame. You got that explosive price movement away from your average. And then when you oversize, you feel like you're really being compensated for that smaller time frame, that you just want to exit your position, see the green, go home with a smile on your face, versus sitting in a position of uncertainty because you haven't taken any money off the table. But when you size something right, you're not really getting paid on a 5%, on a 6%, on a 10% move with a 10% position. But what ends up paying you a fortune is watching your portfolio grow 15 to 20% on a 10 to 15% position in a name like Hood, because you crushed the trend and just sat there patiently. So
I mean, even looking at the compounding effect as well. You can pick a random day. Once this was up over $100, for example, on Monday, September 8th on Robinhood, this gapped up and broke out of like another little pattern on Monday, September 8th. It was up $17 that day. The compounding effect that it takes, if you've got your position from down here at 46, 47, $48, even $50, at $17 that day, that was 16%, is actually 30% or 33%
when it's at $50.
Yeah, exactly. I mean,
Yeah.
it's the compounding effect that takes place.
And I'm sure
And
you're
that-
speaking from experience, April. I mean, Ariel, you used to day trade, right? When you first started.
Absolutely. Yep.
Yeah.
That's literally how I got my start. And it's funny because people go, well, you made so much money when you started. Yes. It was a lot to do with environment and very, very little to do with what I know.
Yeah, it was
But
an
there was
anomaly kind of market.
exactly. But there was a lot of instances where I go, man, I would have made so much more money had I just held that trade, right? Whether it was AMC. I mean, I remember when I was day trading, I had 70,000 shares of AMC at like 217 or 220. I made 7 grand that day on a scalp. I was jumping for joy. Had I waited 7 trading days in pre-market, it was at 25 bucks. It would have been $1 million winner. Right. And so it's just like, how much more money did you just leave on the table because you were a day trader? But problem is, you oversize it, you make 7 grand, you make it in 30 minutes. What other career can you make that kind of money in? The answer is like none. And so you've oversized, you take your money off the table, you're done with the trade. You're not thinking about bigger picture. You don't understand that this is actually moving with GameStop as much as it is, and that this thing maybe has a whole lot more room to go. But again, a lot of these things are learning experiences. I know that I would have done even better had I just made my first $1 million day trading and then switched to a swing trader like right in the middle or ends of 2020 and into 21 versus yes, I did really well in 21, but I probably left another 6, 7, $8 million on the table being a day trader. And then of course, I make the perfect top tick transition going into 2022 as a swing trader, which that was a life experience. But it was good because I did catch energy into 2022, but then the market was super, super choppy. And at this point, I was learning from Gil Morales on the short side. I was learning from Mark Minervini in his room on the long side. And it was just, there's nothing to do here. There are no setups. They're stuffing. They're not following through. And you can't gain exposure more to the market because progressive exposure is keeping you on the sidelines. And then on the flip side, it's Gil Morales is going, this thing is hitting this left side peak. It's rejecting. This is the 620 setup. It's rolling over. So like I had a lot of lessons where things aren't working on the long side, but they are working on the short. And then that has kind of prepared me for what those setups look like intraday. So I can just take advantage of a 20, a 30% unwind, and still kind of keep the equity curve. And it's the same thing. Like when I want to get, just like we started this conversation, the best time to buy stocks is after a market correction. The best time to short stocks is names that are showing relative weakness after the market has gone ballistic, which is why MSTR has actually been such a nice short, because MSTR showing relative weakness while the market has just gone vertical. Now all of a sudden the market starts to see a little bit of distribution. MSTR hasn't survived, right? It's just been total catastrophe for that name. And the market's down 5% off highs, right? But MSTR had been showing relative weakness going back to, well, we know when it peaked in November. We didn't know if it was ever going to set back up again to potentially go long, right? So you got to, give it a chance to base. But when the market continues higher and this thing starts to break down, right? Considering the market is still going higher in August and September and parts of October, right? Now, all of a sudden, you start to live below your 200. That's a huge red flag, makes for a very easy short. So the best time to buy stocks is after a market correction. The best time to short stocks are names that are showing relative weakness after a big advance in the market.
Yeah, that
That's
MSTR is, it's almost like the opposite of like a beach ball underwater in a correction, right?
Yep.
It's like if someone were to who couldn't swim and like the Nasdaq is their life jacket, right? And then that Nasdaq starts to pull back and then you just start to
It's over
drown.
with. Yeah.
Great
MSTR has been wearing cinder blocks around its ankles for the last 5 weeks.
Yeah.
More. And so this move down isn't so surprising, when you just start to say, yeah, Bitcoin and the NASDAQ start to undergo a little bit of distribution. And then it makes you wonder, how much worse does it get if the NASDAQ kind of plays out the way I was thinking, like can somehow give us that 12% correction, which by the way, after a 60% up move, we should all welcome a 12% correction. The problem is
it would be natural. Like it wouldn't be it'd be reasonable.
dude, we're all junkies though. We all want like something like we want more rare earths. We want quantum set up again. We want nuclears to be ready to go again.
Those
But
take
they're
time.
not.
Those take a lot of time.
But they're not. And that's the reality. Like I would like to tell the dudes in my room, hey, you know what? These things all look great. Let's go. We're gonna go and buy XYZ and it's gonna all be good. Like, is it? Meanwhile, I'm up here going, hey, TSM just hit the declining 50 day. I'm shorting it using the declining 50 day or really flattening 50 day, as my stop, where it rejects prior day high, it rejects the 50 day, it rejects the 5 day, and now we're just kind of doing nothing. I know we've got NVIDIA earnings on tap, so I don't want to get too aggressive on semis.
Yeah.
But semis could very well be the next group to pull along with financials. So semis pull, financials pull, then it's just, you might as well just buckle in because we're going to go down 10%. And then what happens from there, your guess is as good as mine. But I know what I'm looking for. What I'm looking for will be a follow through day. The market will put in its low. You don't know it's the low. It'll float higher for 2 to 3 days. And then on that third or that fourth day, you'll not only have a pretty decent watch list, you'll then get a follow through day in the market, and those names are buyable and continue to use progressive exposure. If you're wrong, you've only got 20% of your account in the market. If you're right, you're quickly 20% exposed, and the market will give you more setups right away within like the next 10 days for you to go from 20% invested to 70% in 2 weeks. And the first names that you bought should be acting really well because those were the names that were showing the most relative strength during the correction. So that's kind of how I'm treating this environment right now.
Yeah.
Otherwise, it's just far too choppy to have conviction in like any one single direction here. It's like speculatives have already gotten their ass kicked. And unless you're into shorting Costco, which also looks like it might enter into a stage 4.
It does.
Right? Like there's nothing to do. Costco reminds me a little bit of like Sprouts, Sprouts Farmers Market, where it just kind of hangs out and hangs out and hangs out underneath the 200 and then eventually, gives way. Also could remind me a little bit of like this MMYT. When the market was in an uptrend, this MMYT doing absolutely nothing underneath the 200 for the longest time, and then eventually just starts to give way and speed up. And that's how these things go.
A year. I haven't looked at this.
So your activity and exposure is probably the lowest it's been in quite some time, right around where we're at now.
Correct. Yeah. Also because I covered most of my shorts on Friday, and today was literally a 5% portfolio add on the short side to TSM. And that's partially because it's kind of looking like it's getting weaker. My gut tells me they're coming for semis next, right? They don't really spare anything during a correction. And also, and I could be wrong, but I'm risking like 1% to highs on TSM on a 5% position. So effectively zero risk. Like even if I had 100% of my account there, I'd be risking 1%, right? But I've got a 5% position there. So I'm risking nothing to find out. And really just to do something, because again, just like you guys, I like to make some kind of money. Yeah. And if that's what it feels like is going on, then I'm going to dip a toe, even though I covered some shorts on Friday. And then, I'm comfortable kind of shorting against that 50-day, and it's like the tightest stop in the world. So,
and you obviously, you don't. Oh, sorry. Go ahead, Tuesday. Go ahead.
No. Okay. So with stops and position, let's say you get a trade. How loyal are you to your stops? And I don't mean that in terms of when they're hitting. I'm talking about you buy something at 100, your stops at 98. And here we are sitting 99.1 for a day and a half.
That's a great question. And let me answer it like this. If 98 is my stop and we're at 99.40 and it looks like it's coming down, the next question I ask myself is, how is the market acting? Mm-hmm. If the market's acting strong and my stock's going down, relative weakness. If the market's acting very, very weak, and my stock's hard, and I'm down 60 cents on my shares, and it's actually outperforming the market, where like the market rebounds for 30 minutes and my stock, shoots right back up, then it's showing some relative strength. I want to be a little bit more patient.
Yeah.
So ultimately, it depends how my stock is acting versus the market. I think is like the easiest way to kind of make that determination. If the market's pulling really hard, like a great example. So Oracle, okay? When I bought Oracle as a bouncer off the 50-day, I bought this thing on 10/23. Okay. Well, on the 24th and on the 27th, the stock market saw new highs, and Oracle was red both of those days. And I was just like, that is unacceptable, right? Like that is not because on the 22nd, we had like a strong bounce in Palantir, a strong bounce in NBIS, a strong bounce in Hood, a strong bounce in CoreWeave. And so on the 23rd, I'm like, shit, if these things are all going to bounce, let's go Oracle, right? So I buy Oracle, and the market's new highs. Oracle's acting relatively weak. I'm done with it, right? Literally on the 28th, I want to say it was red back-to-back days, the 27th, 28th. I cut it on the 28th, and on the 29th, it was back below my average. And so it's one of those scenarios where low of day was my stop. We didn't get enough of a push to justify even moving my stop to flat, still low of day. But because it was showing so much relative weakness versus the market, I was done with it. And ultimately, that turned out to be the right decision because, I mean, look at it now. So great question. But ultimately, it's how are you acting versus the market? If you're telling me Rome is burning and Oracle's just hanging in there, fuck it, right? Let's just let it work. If you're telling me that the market's at a new all-time high and my stock is red, you're gone, right? What do they say? Cut the weeds, water the flowers, right? Trim the weeds, water the flowers. That Oracle's one of those where you cut it, right? It's gone. But a name like ARK, she gets a little bit more leeway because I've been in it for 5 months. You get a break and a close below the 50 before I take some drastic measures and file for divorce. So
And I have a question. And when it comes to like that TSM short that you just talked about, obviously this like isn't a trade you're like, man, I could make a killing on this.
None.
Obviously a small cash flow trade, but how much of a trade like this is for you to just kind of keep a good feel for like the tape? Like, okay, if this doesn't work, okay, shorts are getting less traction, maybe start to pivot my focus a little bit. How much of it is that?
It's almost 100% that. Of course, it's not going to make some life-changing money, but if this continues to act weak and I'm watching AMD and I'm watching KLAC and I'm watching an ASML and I'm watching an AVGO, I can't own them all, but ultimately this one's going to kind of let me know if the coast is clear to say, hey, this thing's failing. And I don't even have to look at AVGO if TSM is failing. I know what's going on because it's effectively the same pool of capital flows that hold these things up or that make these things pull back. So that's actually exactly what it is, because I want to align myself in the side of the market that's giving me the least amount of headache and working best, right? If TSM is going to work as a short, I know I could probably sneak into ARM. I know I could probably sneak into AVGO. I know I could probably sneak into CRDO. I know I could, in the ideal scenario, we do all of this after NVIDIA earnings, and NVIDIA is kind of confirming some of that group weakness that you're also maybe seeing within some of these other names.
Exactly.
Right?
Yeah. And the important thing too is you're not taking these shorts either as TSM's like gapping down and breaking a range on a Friday.
No.
Right. You're getting them on, rallies up into declining moving averages where your stop is almost like nothing.
Literally nothing. So I have effectively a 284 average on TSM, and my stop is 0.8% to high a day on a 5% position. Right. So again, a 10% position would mean less than 1/10 of 1% risk on my account. I have less than 1/10 of 1% risk on my account, but I have 5% of my money there. And I'm making some money right now. I would rather be making something while also gaining, and more importantly than the money, is the feedback from the market because I'm involved and I'm just staring at my, I'm not just staring at it, but the P&L in my portfolio is telling me what to do, right? It's the same way. Like when UAMY worked, it was okay, money's coming out of speculation. Let me go try another one. Oh shit, that worked. Let me go try another one. Okay, that's working. Let me go look for another. Right? Because that's the side that my arm's not being twisted. It's like I'm doing it and I'm feeling like a genius. Right? I'm not feeling like a genius because I am a genius. I'm feeling like a genius because my actions are aligned with what is actually paying in the market, not my
Yeah, well
opinions.
said. Yeah.
Yeah, they're not my opinions. It's just what the market is. It's handing me money. And I'm over here like I just keep turning around. You got more for me? You got more? Until of course the market, I try it and it doesn't work, I get stopped out. I try it, it doesn't work, I get stopped out. That is also valuable feedback. So that's really, really important
So it's
to
just
kind of
progressive exposure. It's just listening to your equity curve and letting that
yep,
guide you. Really.
yeah.
Yeah.
That's one of the best ways. I think that was like the best lesson I ever took from Mark Minervini because I talk about this a lot. There's two kinds of equity curves, right? Here's with your realized gains and including your unrealized gains. With just looking at my realized gains, I haven't had a 10% equity curve drawdown in over 2 years, right? It was even when I had a 12 trade losing streak, I lost 1.5% of my equity, right? I didn't get more aggressive behind losers. I got less aggressive. When Rigetti paid me, it was a 5% position, but it moved enough to cover 12 losers. When I took UAMY, it was a 6% portfolio position, and that one made enough to cover all my losers. When I took Nugget, I shorted it 3 separate times, all as I was already correct and making money, right? I didn't shorted more as I was wrong. I shorted more as I was right. And it ended up being like an 8% position. So again, nothing super aggressive, but yes, using progressive exposure on the side of the market that is treating you best, not what my opinions are. This is what the market is doing based on my portfolio going up. And I want to keep going to the side of the market that's treating my portfolio best. And I don't argue with it. But again, there are nuances to being a long trader versus being a short trader. Diminishing returns on the short side, you got to cover things off a little bit quicker. And then
Yeah, I have a quick
obviously,
question relating
yeah,
to that. Now I think there might be a lot of like maybe, say beginners in here who hear this and, want to go out, try, tackling shorts on, every down move and stuff. But how much experience, in cycles would you say it takes to really be able to, positionally manage longs and shorts, consistently like that, like you do?
I think I would say like go through three nice bullish trends that last more than 4 months will give you because you'll start to notice and one of the things too, like there are a lot of times when even I will like take a mental short. I don't actually short. I like say, hey, this looks like a good short, like Netflix, for instance. I thought on Thursday, Netflix rallying back up into the 50-day. I was like, this looks pretty sweet here
Yeah.
against a rejection of what was 1022 and really even prior day high that I almost put a short on Thursday, but I was traveling. I was in Florida with Alec. But ultimately, I told myself, this looks like a good short. Well, you look at it, it then ends up working for you. That's the market, even though you didn't make any money, that's kind of the market confirming to you that what you're seeing is the right thing, that you would have done the right thing. Now, next time, just execute on it with proper size, execute
Yep.
on it with the proper risk and at the proper level where it ends up being a very low risk. If I'm wrong, right, my entry is something like 116, my stop is like 117. I mean, what are we talking about here, right? Peanuts. But you end up getting effectively a 6-1 on your money by today, right? And that's just kind of my thinking. And it takes a couple cycles. And there are times when I'm running longs and shorts. Like right now, I'm technically long NEM on the gold side, even though it's not really doing too much at the moment. But I'm long NEM from, I want to say this was on Friday that I bought this thing, as it was reclaiming the 50-day effectively. And really at the time GLD was starting to push out. So yeah, it takes a couple of cycles, but then it can just be done because your brain should differentiate like this is my entry tactic, this is where money is going, this is where money is leaving. Am I being rewarded for being long biotechs Am I being rewarded for being short speculative stuff? If the answer is yes, then you're just seeing things the right way. And remember that money rotates from one place to the next. So that's kind of, and it does, it takes a couple cycles, but
Yeah. I had
nothing
another
that people can.
question
Yeah.
from someone in the chat. A question on covering shorts. Um, so it said it sounds like he covers into weakness, obviously when the market gaps down and potentially is putting in a tradable bottom. Are there situations where he would hold through those days for a bigger move, or better, in his opinion, to have the shorts be somewhat shorter in duration to avoid the drawdowns as they bounce against you?
There are some, like UAMY ends up being a scenario where I ended up covering far too soon, and I should have held through the better part of this consolidation. That's the honest opinion, right? When I saw this thing gap down the next day and then tighten up again, I was like, I don't really see how I can short this again without it breaking the range. And then of course the next day it breaks the range. But I treat it in a similar fashion to the longs, right? So I'm looking for a momentum burst away from my average. That allows me to just de-risk the trade where I know I've only have a 40% win rate. So at the very least, I want to get myself into a flat position as quickly as possible. So cover some into the weakness and then just continue to trail.
Yeah.
Again, it's tough to do, but again, you have to think about that diminishing return. 30 to 50% is about the most you're ever going to get on the short side. Yes, could you get more? Could you get 60, 70, 80? But then you're just kind of holding through a ton and you're going through some moments of heartburn where maybe that money could be better allocated in like a fresh long versus like just sitting in a stock that's like now slowly dying.
Yeah.
But yeah, it's kind of my thinking. 3 to 5 days, cover some, like even UAMY. It was on day two, when I got such a big move down. And this one's good to review. If you guys go back on my X and look for this trade, you get this pretty big, almost 30% down move. And I'm getting covers off at 13, and then the next day I'm getting covers off at 12. So I'm not trying to overstay my welcome. 30% move in 2 days, like that's even hard to do on the long side. So,
Yeah.
don't be greedy. Take some of your money off the table and then just comfortably let it work for you. And it's the same thing with Oklo. Like I've gotten myself down to, effectively like the token shares, and it really doesn't matter what it's doing below the declining 20-day. No matter what happens, I'm going to make 25 points a share on the last of my shares. Of course, do I want to see this thing bounce up $25? No. But do I think that this thing can go back down to 80, and maybe the 200 simple moving average at some point? Yeah, I do. So I'm going to just sit there with the last of my token shares so long as we're below a declining 20-day. And I'm done. And if we get a push into that declining 20-day, we start to stay heavy, right around the area where I know I would be done with the trade is also the same area where I know I might want to add more.
Yeah.
Which is kind of counterintuitive for some people because I know now my risk is super, super small on my ads because I'm using this 20-day as my risk level on the remainder of my shares and potentially on a new position. Yeah, it's a great question.
Something like Arc that you're riding from that breakout down there is how proactively then are you trimming something like that? That's got a longer term base, just kind of coming out of a correction a little bit later, a little bit after the correction, but well within the range to where this can be a multi-month mover, which it was. How you trimming this over the first few months?
Well, actually, I will tell you exactly how I played Arc right now. Okay, so Arc I bought on the 6th, and I bought it out of this breakout. I took my first trims on the 12th, or excuse me, on the third day on the 10th, and then another little piece on this small push down right on the 12th. So at this point, I am out about 40% of my shares into this push. And again, of course, we all know what the push looked like. It's all hindsight. But I've now settled into 60% of my position, and I don't touch any more shares until I put ads on into this, trying to come out of this little load sheet setup. So after we base, like even on this gap down, I did nothing with it because once it pushed far enough away from my average, I was then using the 50-day. And even this little gap down didn't bug me.
Yep.
Even this next move down when it broke the 50-day but built a higher low didn't bug me. Same deal on 9-2, didn't bother me. And once we started to trade very, very tight right in here, obviously closed right where it opened, I ended up adding some right here. And unfortunately, I took those shares off on FOMC day when it looked like, maybe all hell was breaking loose. Uh, and then, like you guys, I'm partially human. I added some right here. I was like, and I even sat through this, but it didn't take out prior day low. So I just kind of sat through this. And as we started to fade, I was like, you know what? I'm just going to go back to holding my 59s. I made a little bit of coin here. Let me take it off. And ultimately, this did end up going, higher. But I just
literally the exact same around that FOMC is I'm like, yeah, okay, like this is doing.
I remember
great. Like,
that. Yeah. Yep.
I really want this, and then as the market's kind of like getting really nasty, and we just break previous day's low, I'm
Yep.
like, all right, I'm out of here. It ticked low by like 10 cents or 5 cents.
I did the exact same thing. So my sells were on that 917, 78.80. So,
Yeah.
literally 78.88, which was the low was 78.87. Okay. So I sold my ads from 76.74 on 9-9. I sold them at 78.88, literally 1 cent above that day's low. So
That's incredible. Hey, I have a quick question. On
Yep.
that ARC trade that you took back in June, this would be like the last one. We could wrap it up. But
Yep.
so how come? So I guess let me try to think. How do I want to say this? So obviously, ARC was like a really obvious pattern, right? How come you buy ARC versus maybe looking to maybe get more size or into something like a Hood or a Roblox at the time? Is it more that the chart pattern ARC gave at the time? Whereas obviously Hood can make twice the move ARC will make in the same time period. Why go with like the ETF? You don't want to be a stock picker and maybe pick the wrong. We're coming out of a correction. ARC will go with the market, so it's a safer kind of trade. Is that
Yes, actually, it was kind of a bit of both. I knew that owning ARC when I looked at her top 10 holdings, I knew she had some really great names in there,
Yeah.
but I didn't know for sure which one would pan out the best. And let me tell you, man, I already had a little bit of a heartbreak in Hood. So I bought Hood in after hours on the day it gapped up for earnings. So I bought Hood on this thing gaps up for earnings on 4:30. I buy it at $50 in after hours, and I'm using prior day's low as my stop. So $46. I get stopped out the very next day in after hours that I sell the bottom in after hours. And I didn't have a big position. It's just 20,000 shares. I mean, I get, it relative. And of course, look at the move. So by the time we got to when ARC gave me a nice setup, I was looking at Hood, and I don't really like this is not a flat consolidation. It's just kind of channeling and grinding higher.
Mm-hmm.
So from just a technical perspective, when I go to get involved into something, I want to make sure it's got clean enough technicals that I can limit risk. Hood was just kind of channeling higher. So just, if I were to say, when did you buy ARC? It was on 6.6. Like if I show up and buy ARC on 6.6, I'm effectively needing to buy a pullback to the 10-day versus just buying a beautiful flat base breakout in ARC on that same day. So from like a technical perspective, ARC allows me to get more aggressive, but I don't want to have to assume ARC's got to do well. Why couldn't it have been coin? Why couldn't it have been Tesla? Why couldn't it have been, BMNR or whatever, TEM, CRISPR, Roku, right? So she's got all these names in her top 10. My thinking is just, I don't have to be in the exact one. And I own Palantir, right? I didn't have to be in the exact one that is going to be the leader for her. I just know that as a bundle, these things for the most part are acting pretty well. Like you said, a Roblox, a Hood, a CRISPR, a TEM, a Tesla coin, what ended up being a BMNR, horrible decision. So Kathy's back to her old ways. So unfortunately, but at the time, really nice holdings. Really clean technical setup. And I'll tell you what, I was actually off. I was early on ARC. I bought it the day before and I ended up taking my stop at low of day. But what I loved the next day was if you looked at the morning volume, it was dwarfing what it was doing the day before. And
Yeah.
you guys have seen this before. How many times have you seen a shakeout before the real breakout?
Oh, yeah.
I mean, it's like it's classic because you get a shakeout, nasty move, arc, it's a POS, people short it, long sell it, and then the next day it's breaking out. Oh my God, I got to cover my short. Holy cow, I can't believe I just sold my long yesterday. I got to rebuy it. Similar to my story, except I bought this break over price. And part of what I liked was, I mean, look at how tight this day is.
Oh yeah.
6.4 from technicals. You're just like, dude, that thing is just over 59 bucks. I'm in there. Well, the next day it got me in. And then immediately at the lows of the day, it got me out. I actually took ARC on, let's see. So I bought it on the 5th at 58, and I stopped at 57.08. So again, very negligible, tiny little loss. And then the next day, you come in, you buy at 59.04, right? 50 cents higher, but it ends up being the one that you can sit in for 5 months with next to no stress. So, and without needing to be in, and here's the thing. If you buy ARC, it's working, but then you get a nice setup in Palantir. Hood gives me another nice one. Tesla gave me one. I'm buying those too, right? Like it's not like we didn't all spot that 360 breakout for Tesla. I mean, I don't think, and I know you guys are on top of stuff like that. You
Yeah.
know, there's no chance you guys are missing this 360 breakout in Tesla. So, but how much longer did it take Tesla to set up while
Man.
you're already sitting in ARC? See what I'm saying?
One thing I love about doing these and like reviewing some of these trades is that then you take a step back to like today, right? And then you look at the stuff that is being presented on our screens and our scans like right now, and you're like, wait a minute, this is not what I'm seeing from the opportunities that are potentially present right now. So just wait until these present themselves so we can talk about them 4 months from now, 5 months from now, like we are right now, these opportunities from May, June, July, whatever.
And it's how we get better, dude. If we
Yeah.
don't like look at, you know, like I missed Hood. I go back all the time and like, you know, it hurts my heart to not be in it on the long side and say, what could I have done again to get back in? What did I do? I didn't rebuy it when it broke out, had the very subtle gap up, took out the earnings high, 51.30. That was the level. I even like gave that as a long idea and I just missed it, right? So like, what can I do better? I was short MSTR. I got stopped out. I didn't reshort it on October 7th. Like, what can I do to get better? Like, I review all of the biggest winners and all of the biggest losers to see, like, what was it that I was missing? Like, why didn't I execute it? Did it just not set up cleanly? Is that just not a setup in my playbook? Do I not trade higher lows? You do. Do I not trade flat base breakouts? You do. Do you not trade earnings gap ups? You do. Do you not trade high volume closes? Like, so what is the setup that it gave where I could have gotten on and was it already acting like a leader at the time, you know, for you to be able to get on board? And I do it with everything, dude, because it's the way that you catch the next one. And I don't ever look at Hood and just be like, oh man, I missed it. My career is over. No, like I kept going and looked for the next stocks that set up to my liking so that I don't miss them. And you guys are young just like me. Like, dude, this is going to be, we're going to be having this conversation. The year's going to be 2054 and, you know, we're 65 years old or I'll be 64, you know, and we're going to be having this conversation, still reviewing things that we missed because there's always ways to get better.
I do. You had, I think on your pre-market stream, I mean, this must have been months ago, but someone had asked, I think someone of the, because I tune into your
in the
pre-market
audience,
streams
in the
all the time.
audience. I
Yeah.
already know. I already know. How do you
Okay.
feel about not being super long? How do you feel about not being super long right now? And I was like, yeah, because my career is over tomorrow or something like that.
Yeah,
you know?
exactly. I think someone asked, are you bummed you missed BMNR? And you were like, why would I have FOMO when I have like a, 30, 40-year career to worry about ahead of me, you know?
Yeah, it doesn't matter, dude. Like I miss charts all the time. Like if I'm going to sit here and be depressed about all of my missed trades, dude, I'll just hand me the rope right now. Right? Like, but I've also had an incredible year. And so on the flip side of that, I gotta be happy about the thing. Like, sure, am I going to be like, oh my God, I could be up double what I am this year? Right? Or I could just be like, what did you do wrong? What could you have done better? Did you oversize your trades? Were you not patient enough? What was your entry tactic? What day did you get long? What were you seeing in the market? And one of the best ways to do that is to track your trades. I don't care if it's by pen and paper. I don't care if you use TradeZella. I don't care if you use TraderView. I don't care if you got it. Whatever you have to do, track your trades, when you bought it, when you trimmed it, when you sold it, what group it's in, the day you bought it, how many shares, how was the market acting at the time that you bought it, how was the underlying group acting at the time you bought it, peers in the group that were also working well. And then all of a sudden, you've got like something there that you can go back and review and a handful of charts you can look at to help you build the conviction of, oh, it wasn't just JP Morgan going up on its own. JP Morgan was going up with Goldman Sachs and Interactive Brokers and, Wells Fargo and Citigroup. And these all looked identical. And this is when you bought it, Ariel. This is when you stopped out. What'd you do wrong? You just had your stop too tight. You didn't give it enough wiggle room. You weren't listening to the peers in the group, which were still acting well, and you just had your stop too tight. And then you missed a 60-point move in JP Morgan, right? And how can you do better? And that's like always my thinking. That's how you improve. But you have to anything that's not tracked, you can't improve upon it. So you have to track your trades. It's going to be the easiest way for you to go back in, dive in, and be like, I could do this better. I could do that better. And go from there.
Yeah. So someone had asked if you took that coin breakout shortly after ARC or not in June.
No, I missed it. Another missed out. And by the way, I had an alert set and I was staring right at it. So my alert was
set. It looks
set.
really similar to ARC too. Same flat base.
You're talking about this one. Yeah, you're talking about this one. Yeah, I missed it. And I was staring right at it. So it was like 265 or something where my alert went off. Because before like this little upper bound, I was like looking at it through a prior day high, and I was kind of just looking at it like right through here. So same thing.
You had an alert from before that went off, and
yeah.
Dude, so this thing was nuts because I've been kind of like screaming about this prior because this was right after Circle IPO'd, and Circle makes USDC, the whatever stable coin, and all of Coin's transactions are facilitated in USDC. So Circle has an agreement with Coin where 50% of USDC, or 50% of their revenue that Circle generates goes
to Coin
for them to use their stable coin, which therefore increases their reserves, which they therefore invest into treasuries and gives them their money. And I'm sitting there like, when is the market going to wake up to this? Or what am I missing with this? Or is it just sitting around waiting? And then finally it was just sitting around waiting, getting tighter, probably being accumulated, whatever. And then finally it takes off as Circle begins to make it second leg. Actually didn't make a second leg, but as Circle begins to kind of stabilize a little bit.
Yeah, I mean, Circle made an absolutely massive move. I thought that this thing was going to go higher, but what it ended up turning into was a total disappointment where it hits those highs, 430, 43, and that's just disgusting price action. But it's not helpful when, Bitcoin itself isn't really, trying to push higher as well. Bitcoin's just effectively been going sideways since May, with a couple little squirts higher. So yeah, it's but yeah, I remember this one like it was night, like it was yesterday. And I just missed it. And why did I miss it? I don't know, because I had my alerts set. Right. But part of it is I'm not going to catch them all, even when I'm staring at them. Right. Even when they're on but I did my job. My job was to find it, recognize that it looked good, recognizing how tight of a prior day that had, recognizing how massive this volume was, recognizing it gapped above the 200. It established itself above the 200. It got accumulated above the 200. Big pickup in volume here. And then it just went sideways, and it offered you a very, very tight entry at $260 all the way up to like 270. with your stop at low of day, and then all you would have had to do was just adjust your position sizing. But no, I missed it. So
God, where are those setups right now, man?
there
Jeez.
aren't.
Dino, I guess.
That's the
Dino.
thing. There
Yeah.
aren't any. And that for me just is a cue to do nothing, which is why I revert to my my fantasy, where it's just that this market comes down similar to what we had in this April washout, where we go and wash out against 2022 highs, similar where we wash out to this year's highs. It ends up being a 12 to 15% pullback after a 60% up move. The year maybe even finishes, flat. It's just a flat year for the stock market. It was just big volatility in both ways. The year finishes somewhat flat. And then we look for that follow through day going into next year. And then hopefully some of these growth stocks are ready for, the next leg up from there. And then, it might take a quarter or two to us to get back to these local highs of October. But then, eventually the market just naturally trends higher. Or we just go sideways for a few weeks, and then we start to get some actual strength back in the semi sector. The banks start to shaping up just a little bit more, and we get a little bit more broadening in participation. Problem is I look at equal weight ETFs, and I just don't see it, man. Like I look at equal weight, and I could kind of go through some of those. You look at like your RSPC for communication services, trash, RSPD, consumer discretionary, kind of disgusting. And I'll just kind of pull these up. So RSPC, this doesn't look all that hot below the 50-day. It's not tight, and it doesn't look, is it going to bottom soon? Maybe, but I don't know when. I look at RSPD, and the reason that I look at equal weight is because I don't want one stock to have too much influence over the entire sector. I want to know that the entire sector actually looks pretty good. RSPD looks about ready to break below the 200. Utilities, which is RSPU, not so bad actually. This is one of those sectors, and that's why GEV is still kind of on my radar, right? This thing looks, it looks bouncing off the 50. We're just kind of hanging tight. We're either going to start to live below the 50, no good, or we're going to start to turn back up, and then that will look a little bit better. And we could just kind of keep going. Consumer staples, not so good. Real estate, yes, the group has been better, but when you think about equal weight, real estate looks terrible, right? And really it's RSPH, which is like now we start to get to what looks really good. Healthcare, right? Like this is now getting back above the 200. It's choppy as all hell, but it starts to look like your TMO. It starts to look like ISRG. It starts to look like your Lilly. And then you've also got RSPG, and this is another one. This is your energy, equal weight. And, this is just when you zoom out, and it's just a giant base, right? I mean, this looks a whole lot like ExxonMobil when you think about it, right? Big move up, big giant sideways consolidation. And I go, look at Dino, look at PAR, look at XOM, look at MPC, look at VLO. Like, okay, these aren't sexy. Nobody really wants to own them, which makes them even that much more attractive to me. It's not until like everybody gives in and buys them that they end up really going on to work.